Hello, Canada. This is your market alert for September 2025, a month that promises to be pivotal for dividend stock and ETF investors across the Great White North. I'm your host, bringing you the latest, the boldest, and the most urgent insights you need to navigate the Canadian dividend landscape in these turbulent times. As we step into September, the Canadian markets are standing at a crossroads. Inflation pressures have finally begun to ease, but the Bank of Canada's cautious stance on interest rates keeps investors on edge. The benchmark S&P/TSX Composite Index has shown resilience, yet volatility remains a constant companion. For dividend investors, this environment is both a challenge and an opportunity, a call to sharpen your focus on quality, yield, and sector strength. Let's talk numbers. The average dividend yield on Canadian equities currently hovers around 4.2%, a figure that continues to attract income-focused investors hungry for reliable cash flow amid global uncertainty. But not all dividends are created equal. The key is identifying those companies and ETFs that combine sustainable payouts with growth potential. Energy remains the heavyweight champion of Canadian dividends. Despite global energy market fluctuations, Canadian oil and gas producers have maintained robust cash flows, supporting dividend increases and special payouts. The energy sector's average dividend yield now stands near 5.5%, making it a beacon for yield seekers. However, investors must remain vigilant. Geopolitical tensions and regulatory shifts could introduce volatility. For those looking to diversify within energy, ETFs like the iShares S and P/TSX Capped Energy Index (ETF XEG) offer broad exposure to top-tier producers, balancing risk and reward. Turning to financials, Canada's Big Five banks continue to be stalwarts of dividend reliability. With dividend yields averaging around 4%, these institutions have weathered economic headwinds with disciplined capital management and steady loan growth. The recent uptick in interest rates has bolstered net interest margins, providing a tailwind for earnings and dividend sustainability. ETFs, such as the BMO Equal Weight Banks Index ETF, ZEB, provide a compelling way to capture the sector's dividend strength without overconcentration risk. But the story doesn't end there. Utilities and telecommunications sectors are emerging as defensive havens amid market uncertainty. Utilities, with yields near 4.8%, offer stable cash flows backed by regulated revenue streams. Telecommunications giants like BCE and TELUS continue to deliver dividends north of 5%, supported by growing demand for 5G and broadband services. For investors seeking steady income with lower volatility, ETFs like the iShares S and P/TSX, Capped Utilities Index ETF XUT, and Vanguard FTSE Canadian High Dividend Yield Index ETF VDY are worth a close look. Now, let's address the elephant in the room: technology. Historically underrepresented in Canadian dividend portfolios, the tech sector is quietly evolving. While many tech firms reinvest earnings rather than pay dividends, select mature players are beginning to reward shareholders with modest but growing dividends. This shift opens a new frontier for dividend investors willing to embrace a blend of income and growth. Keep an eye on ETFs like the Horizons S&P/TSX Capped Information Technology Index ETF HXQ for exposure to this emerging dividend theme. September 2025 also brings a renewed focus on dividend sustainability. With global economic headwinds and potential recession risks looming, investors must scrutinize payout ratios, cash flow health, and balance sheet strength. Companies with payout ratios exceeding 70% face pressure to cut dividends if earnings falter. Conversely, firms with conservative payout policies and strong free cash flow stand poised to reward shareholders through thick and thin. For ETF investors, this means prioritizing funds with rigorous dividend screening and quality filters. The iShares Canadian Select Dividend Index ETF, XDV, and BMO Canadian Dividend ETF, ZDV, have demonstrated resilience by focusing on companies with strong fundamentals and consistent dividend histories. These ETFs offer a diversified, lower-risk approach to capturing Canada's dividend income story. In closing, the message is clear: diversify your dividend portfolio, focus on quality and sustainability, and leverage ETFs to manage risk while capturing yield. The Canadian dividend landscape in September 2025 is not for the faint of heart. It's a battleground where informed investors can seize income and growth in equal measure. Stay tuned, stay informed, and most importantly, stay invested. This is your market update. delivering the pulse of Canadian dividends with the urgency and drama you deserve.